Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Let's quickly look at what's happening in Asia before we go across and get you a check on what's been happening with crude. So this is what you've got. You've got Japan, which is up 2%, Hang Seng, which is up 1%, and SGX Nifty itself is up almost 1%. In fact, exactly 1% higher at this point. You've got a very sobered down comment from Donald Trump, and that's probably triggered the excitement around equity markets, and also the reaction in crude oil, which has brought Brent right back down to $65 per barrel.
Yeah, well, let's get in that expert then, Devina, because that is clearly the single most important factor for our markets.
Yes, Mriganka Jaipuriyar, head of News Asia at S&P Global Platts, is joining us right now on the phone line from Singapore. Mriganka, thanks very much for taking out the time. It's a very tricky situation right now for crude. It's been extremely volatile with regards to what's been happening and the developments. Where do you peg in crude right now? And do you feel 65 would be the fair value?
Hi. Yes, prices have been headline-driven and volatile. A softening in the U.S. stance against Iran is what sent prices, Brent prices 4% down on the day yesterday. We need to be careful not to underestimate the sentiment in Iran and the U.S. president's unpredictability. I think the markets will continue to be on tenterhooks and prices will remain volatile. But Iran's aversion to a direct conflict and seasonal demand weakness, as per our estimates, is going to keep Brent prices capped in the high $60s per barrel. Fundamentally, the market is weak demand season. A lot of refinery outages. Refineries have shut down for maintenance. Platts Analytics estimates that number to be at a little over 4 million barrels per day at the moment. On the supply side, we put spare capacity at 2.3 million barrels per day. Strategic stocks all over the world, according to our estimates, are at about 2.1 billion barrels. So there is enough supply cushion. In the event of a major supply disruption, we don't think prices will be sustainably higher, will sustainably break above the $70 per barrel mark.
Things seem to be under control now, Mriganka, but what if things were to turn on their head? This overhang, what does it do for crude traders?
So, when you say things turn on their head, are you talking about a major supply disruption in the Strait of Hormuz? Because that would be devastating for the markets. That there is approximately 21 million barrels per day of oil that flows through the Strait of Hormuz. So that level of disruption will be very hard for the market to handle. And it's not just oil, right? The Strait of Hormuz is even more significant in the LNG markets, in the gas markets. Qatar is a big LNG supplier. All their LNG tankers, most coming to Asia, pass through the Strait of Hormuz. So that level of disruption is, of course, going to be devastating for the markets. But at the moment, we put that risk at under 50-50. We do not think Iran is going to retaliate to that extent.
Mriganka, good morning. Let's work with what we know at hand, and therefore, let's work with an assumption that the upsides are capped. What kind of, based on the demand supply that we have right now, what are the base levels that you anticipate crude could go down to? Because various estimates say that with the low demand that exists in the world right now, there's no basis for crude to even stay at 65. It should actually head lower. What is your assessment?
I think on the demand side, things are looking a little bit brighter. We have the economic concerns have subsided with all the central bank, the monetary stimulus. China has announced fiscal and monetary stimulus. We have the U.S.-China trade deal. Phase 1 of the deal is expected to be signed later this month. So on the demand side, things are looking brighter. According to our estimates, we are expecting demand to grow by about 1.25 million barrels per day this year. This is higher than the growth that we saw last year. So I think that would put a floor on prices. Just overall strength in the economy, hopefully a de-escalation in the U.S.-China trade tensions, which will further stimulate markets and stimulate the economy. So that is expected to put a floor on oil prices.
Mriganka, one last question. Yesterday, Mohammed Barkindo spoke about the support from OPEC and the fact that there wouldn't be any supply disruption. If at all it came to that, OPEC and its allies will make sure that demand from countries like China and India, which are the largest importers, will be met. In that accord, do you feel then that the capped limits that have been put on some of the allies could get tweaked a bit?
That would, right now, the sentiment within OPEC and its allies is that we will stick to our production cut agreement. We are not going to budge from it at the moment because there is no supply disruption at the moment. And like I said, that this is seasonally weak. It's a weak demand season. There is enough supply in the market at the moment. So, but of course, if there are a lot of ifs and buts in this situation because there is so much uncertainty in the market. If you have prices going up to sustained above $70, it may be hard for OPEC to convince everybody to keep production low because they would want to produce more and make the most of those higher prices. So in terms of a production cut agreement, explicitly, they will never say that they're going to tweak it, but we'll have to see what the demand and supply situation looks like in March, and that's when they will probably announce either, a scale back or status quo.
Okay, Mriganka, we'll leave it at that. Thanks much for taking the time out and speaking to us today. Appreciate your time.
Thank you.
Well, we've got two experts now who've spoken about the most important variable, which is crude, and not likely to have any major disruptions as things stand right now. Let's try and focus on what does that do for markets by and large. Siddhartha Khemka, Vice President and Head of Research at Motilal Oswal, joins us right now on the show. Siddhartha, good morning and thanks so much for joining in. Let me jump straight to the topic at hand. With crude prices doing what they are doing right now, or what they have done overnight, what does this do to the oil sensitives? We know that for the fisc, etc., it is good, so the market should anyways be in that positive territory. What about the oil beneficiaries and the OMCs, which got beaten down black and blue in the last few days?
Yeah, good morning, Niraj. So it's definitely positive for the economy, as you rightly said, as well as for the oil sensitives. The risk of a war, especially in the Middle East, generally leads to a risk of more for the oil marketing company, especially given that the expectation of a sharp rise or a sustainable rise in the crude oil prices. However, with the Trump statement and the de-escalation of the tension in Middle East, it looks like that it was a spike more so, and now that the cool off of the crude has started, it should not impact the oil marketing companies for the full quarter as per se. So that's definitely positive, but let's hope that this de-escalation of tension continues and things remain calm in the Middle East for a while to be sure that this event may not flare up again. So having said that, definitely this one-off spikes will not have a much of an impact on the financials for the oil marketing companies. There was a change in sentiment, which again I think today you should see again a bulk of the losses that they had seen in the last few days. That should start reversing from today.
Mm-hmm. Siddharth, what did you make out of all the announcements that came from the Mines Ministry yesterday, the ordinances that were passed, and how positive do you think this is going to be? At least one aspect, which is transfer of clearances, which was earlier on, taking almost 2 years, and which is a big hurdle with regards to iron ore disruption. That is now out of the way. A more push for FDI in coal mining, commercial mining of coal by private companies, all of these factors. What did you make out of it?
Yeah, so if you say in a nutshell, this is definitely a positive step. If you see the utilities as a sector, they have been reeling under pressure for quite some time, and a reform of such that has been announced was inevitable. Without that, they were continuously under the pressure of a higher fuel cost, and that was leading to the losses. Apart from the other factors that they were seeing. But this is one factor which I think needed to be settled out after the Supreme Court judgment and the entire Colgate scam, after which the entire government and as well as the the sector remained under pressure, given that there was a consistent undersupply or lack of sources for the fuel coal, and you had to resort to import, and you are then vulnerable to the global prices, your the exchange rates, and a lot of other variables that come into play. So with this, I definitely it's a positive step. A lot of the power sectors, a lot of the NPAs in the system that got created after the cancellation of the coal mining, that got accentuated, and now if the companies in the steel, in the metals, in the power sector, they are able to get hold of a mine, I think they will definitely benefit out of that.
But what's the assessment, Siddharth? Which companies stand to benefit the most? There are different notes. Some are saying they would still prefer. Goldman Sachs, for example, is saying they still prefer Tata Steel because of its integrated nature. Some others are saying they are willing to play the high beta game on the steel side as well. In your morning meeting today, when you would have discussed these names, which is the favorite steel stock based on this, as well as the fact that Nucor has hiked prices for the 5th time?
So if you see, our preference would be to play the high beta names given the expectation of change. Tata Steel already has the integrated business, so we believe JSPL might benefit the most out of this change, and that's one stock that we are very positive after this development.
Okay, JSPL, and Devina, it's very interesting that at 145 or 140, the price of 145 is when the whiff of the news that Gare Palma will not be allocated to them came in. The run-up from 120 had been on the basis of Gare Palma allocated to them. But post that news, the stock dipped a little bit, and then the buying that has happened just shows the inherent bullishness in the metal space right now, and particularly for some beaten down names. JSPL is one sale from those 33 levels, is now back to 45, 46, and there is more positive news here.
Yeah, but it's interesting because it is a cyclical segment. We've not really seen that any news regarding the pickup in demand.
But there are price hikes, right?
Yes, but price hikes are happening. So, I mean, fundamentally, over the longer run, you would want to see demand pickup as being sustainable as a move for the industry. These are triggers, probably, for a shorter-term bounce for them. But I don't know whether or not this can hold the sector, which has been a laggard up until now.
Yeah, well, laggard at least until November for sure. Since the last 2 months, there has been a phenomenal pickup in some of these metal names as well. So do watch out for those companies. So that's one set of very important names to watch out for. Obviously, the crude beneficiaries are the very, very important set of stocks to watch out for in the session.
And SBI.
And State Bank of India and some of the others, I think that's the other important pocket too. I mean, it's very interesting, the product that they've come out with. More than SBI, I think it probably is a big benefit for the real estate names.
Yes, and Sunteck Realty already the first one there to avail of this particular offering from SBI, which is the residential builder finance with buyer guarantee. Any company, any builder is, if they meet the eligibility criteria, they can get financing from 50 crores to up to 400 odd crores. Siddharth, comment on this. This is, something that SBI is doing to protect the buyer's interest, but nonetheless, it's adding on to its own portfolio.
Yeah, so we need to understand the nitty-gritties of the offer, but definitely a unique offer on the platter from SBI, and think the market will be definitely looking up, especially the other lenders, to see what kind of the underwriting that the company is doing, because they are guaranteeing that the projects will be delivered otherwise. So basically, it's more of a project-specific and builder-specific approach that needs to be taken. Here they have started with Sunteck, and it's a good step, especially in the current environment where the buyers are not forthcoming, especially for under construction flats, looking at the possibility of things getting delayed and costs escalation and stuff like that. So it's a definitely could be a risk on SBI's balance sheet, but we're not sure what kind of understanding they have between the builder and the banks.
Okay. Stay on with us. That'll come back to you to talk lots more, but it's also important on a day where the SGX Nifty is up 1%, you'll see a positive pop on the index. What do we do with the levels on the Nifty and how do we trade it? Sameet Chavan, Chief Technical and Derivatives Analyst at Angel Broking, is joining us. Along with him, Abhijit, Phatak, Director at Definedge Solutions, is here too. Sameet, I want to start off with you first on the Nifty. It looks like we're going to reskill that 12,100 marker in today's morning session if we do open up the way SGX is indicating. What's your sense? What kind of a trade would you take then?
Morning. See, in last 4 or 5 days, we have seen immense volatility in the market, and India VIX, which was languishing around 10, 11 odd levels, it has spiked up to 15, 16. But it has now reached its higher end. 17 to 18, we are seeing a higher end for India VIX for a time being, and we expect some kind of cool off in India VIX as well. Yesterday we saw good recovery from lower levels, and in the second half we had a buy call on 31,300 call in Bank Nifty. But now after seeing such a massive bump up at the opening itself for more than 100 points on Nifty, we would avoid any kind of trade in index, because we'll have to see how Nifty behaves around 12,150 to 12,200, which seems to be a very strong resistance. Overall we are bullish, but at higher levels one has to see how index behaves. So in case if we manages to reclaim those 12,150, 12,200 on a closing basis, then we would see resumption of uptrend, and in that case we can head towards 12,300 or beyond. But as of now, after such a massive gap of opening, we would avoid any kind of trade. Probably after a cool off nearly 50-60 points, we would look to go long in index, Nifty, Bank Nifty both. And for Bank Nifty, the levels to watch out for would be around 31,700 to 31,800. What we believe is, although we are not taking any trade at the opening in index, there are a bunch of stocks that are doing well. In fact, yesterday also, when we were in a negative territory since morning itself, a lot of individual stocks that were buzzing. So one should focus on such individual stocks that are likely to provide better trading opportunities.
Okay, and we'll talk about those individual stocks as well. But Abhijit, Phatak, what's your call on the Nifty and the Nifty Bank?
Yes, good morning. Yesterday there were some signs of bottoming out based on the options data, but of course this gap was something which no one can predict. And if it really opens at this level, this might be a resistance near 12,170 spot or 12,180 futures. But if it crosses that, then I expect, in any case, I am expecting Nifty to go towards 12,250, maybe this week or next week. So any dip should be used to go long with the stop loss below 12,100 and for a target of 12,250.
Okay. Stay on, gentlemen. Coming back for your stock ideas as well. But Bharti Airtel is the other stock in focus. It's launched a QIP to raise up to 14,400 crore rupees. It also plans to raise funds via other methods. So Amit Sarkar is here with details and how it plans to utilize the proceeds as well. Samit.
Well, there are a couple of news related to Bharti Airtel. Firstly, they have launched their QIP to raise nearly 14,400 crore rupees at an indicative floor price of 435 rupees. That is a discount of nearly 5.2% to yesterday's closing. Now, if we consider this indicative floor price of 435, the QIP would lead to an equity dilution of nearly 6.1% on the expanded equity base, and the proceeds of this issue will be used for payment of AGR dues by the company. However, if there is some waiver of the AGR dues, then part of the proceeds could also be used by the company to meet its debt, capital expenditure and other obligations. Now, do remember that the promoters of the company, that is the Sunil Bharti Mittal Group companies and Singtel, are not eligible to participate in this QIP. And also, along with this, the company is also looking to raise nearly $1 billion via issue of foreign currency convertible bonds, which have a green shoe option to raise another $250 million. So a total of close to $3.2 billion that the company is looking to raise from the markets. Along with this, the company also came out with its quarterly update, and the key highlight from that quarterly update was that in the third quarter of financial year 2020, Bharti Airtel added nearly 2.1 crore 4G users, which is the most in at least the last 9 quarters. Now, according to Morgan Stanley, the addition could have picked up for Bharti Airtel in view of Jio's introduction of off-net outgoing call charges starting from October 10th, 2019.
What's the update on the birthday celebrations today?
Well, so far nothing, but I'll keep you updated on that.
All right, happy birthday, Sameet.
Thank you.
We've got...
Hey, I miss wishing him on air.
Now he's gone, I'm sorry. You can wish him off.
Yeah, but wishing Sameet a very happy birthday. And well, what a day to have a birthday, just when the markets are starting to make heady move upwards.
Yep, I guess it's still here with us, so let's get down tracking on those stocks. Abhijit, let's start off with you.
Yeah, one stock which has given a good breakout in the last few weeks, Tata Motors, has given a good retracement towards 185, 184. and 180 is a good support, which it was a breakout level for that. So it can be bought with a stop loss below 180, and I expect Tata Motors to go back towards 190, 195 in the coming days.
Okay.
The other stock is Balrampur Chini. A lot of sugar stocks have been showing very bullish trends, and Balrampur is also one of them. So that also can be bought maybe here 170, 175 with the stop loss below 165. Eventually, at some point I expect that to cross 200 in the coming days.
Wow. Well, and I wouldn't be surprised because the fundamentals seem in place for that, but let's wait and watch. We'll talk to Siddhartha about that, if at all. But Sameet, to you as well, you mentioned that specific stocks should be the focus. What are the stocks that you're recommending today?
Yes, Neeraj, we have 3 buy calls, and despite market was under pressure in the morning itself, but there were some themes that played out well. In the morning session, we saw cement stocks buzzing, and within this, Ultratech Cement clearly looks good. In fact, couple of days we had anticipated a breakout, and we had taken a 4300 call option buy call. Yesterday, the stock managed to confirm its breakout beyond 200-day moving average as well as the trendline resistance. So from here on, we expect northward trajectory to continue for Ultratech Cement. 4450 is our near-term target. It can be bought with a stop loss of 4260. In the second half, we saw most of the pharma stocks recovering from low levels and mid-cap stocks buzzing. So Ipca Lab is the one stock that has been consolidating of late. Had a massive spike in last hour, and it has managed to surpass its recent hurdle, thereby confirms a bullish flag pattern on daily chart. Looking at the overall volume activity, it appears that the stock is likely to give decent move in next couple of days. So we have a buy call for a target of 1265, can be bought with a stop loss of 1158. Apart from this, from the broader market itself, GNFC is the one stock that has been laggard since last many months, but since last 3 days we have seen early signs of revival. It's on the verge of a breakout, and yesterday for the first time the stock managed to surpass its 20-day moving average. So we expect the stock heading towards 200, 201, which would be our near-term target. It can be bought at current level, keep a stop loss around 176.5.
Okay. The other one is obviously GMR Infra, and the stock in the last 7 days has really given a good move from levels of about 21 odd to 24, but 16-17% in the last 1 month. As you can see, starting January itself, this big leg up that has come into the counter. Last 7 days, it's been up 15%. Siddhartha, do you track GMR?
Sorry?
Do you track GMR Infra?
No, we don't track GMR.
Okay. Is there a trade open, Sameet, on GMR?
Looks like, but on minor dips, probably toward 23, half 23. And honestly speaking, last week we were discussing this particular counter, but considering its overall past year's performance, we avoided. But overall structure looks good, and the kind of volume activity that has happened in last 3-4 days, it suggests that at least for a time being, this stock is likely to do well. So on a minor dip, probably around 23, half 23, one can go long with a stop loss around 21.5, and target to watch out for would be around 26, half 27.
Okay, the other one, which Sameet was talking about, Bharti Airtel. Siddhartha, Khemka, you guys have already in your December ending notes mentioned that Bharti Airtel is amongst the top ideas at Motilal Oswal. What is the impact of this QIP? Would you reckon that there could be a dip, and will that dip be quickly bought into, or there won't be any dip at all because there is enough buying interest?
Yeah, so if you look at Bharti, there have been a lot of developments in the near term as well as a lot of expectation going forward. The two major events, one is the AGR Supreme Court verdict, where they have now a big outstanding dues towards the government, and the second bigger event was the rise in the plans and the tariff rates, and that is something that is fundamentally a very big structural change from the past few years, where we have seen all the incumbents continuously struggling to increase the ARPUs. Now after this change, we believe that ARPUs are definitely improving, and a lot of focus is towards the broadband users, where the average revenue is definitely better than the voice only low cost subscribers. Having said that, we believe that the recent price hikes is something that is not all, and they would definitely need to do a second round of price hikes, maybe 6 months or 8 months, 12 months hence, but that is something that they would need to do going forward. Looking at the demand from the AGR, the company is going for a QIP, and that is opening today. That will lead to about 5 to 6% dilution, but I think that is something positive rather than going towards further debt raising, which anyways the balance sheet was under pressure. So overall, if you see, we believe that stability in the business is emerging, and that is leading to a positive view coming forward. Overhang of the QIP will now go away. There could be a slight dip after the QIP, but from there we believe Bharti Airtel would be one of among our top picks for the year 2020.
Okay, Abhijit, maybe you already spoke about Bharti and I've missed out, but if you haven't, how is there a trade that could be done or initiated in Bharti in Airtel today?
I've been looking at Bharti, of course it's a bullish stock, but 465 has become quite a strong resistance, and even yesterday it could not cross 465. So if it crosses 465, I'm expecting Bharti to go towards 490. But if it doesn't cross 465, then I'm afraid it can go back towards 450.
Okay, that's Bharti Airtel for you. Last 3 months, though, has been a good move up, 27% on the counter. Excuse me. 1 minute left to go for market pre-open, so we'll just quickly once again head straight to Asia as a pocket, which is doing better actually, just a few more points up for Hang Seng, and Nikkei holding on to gains of about 2%. Big move on SGX of 110 odd points on the SGX.
Yeah, Asia is supportive, Devina, crude is supportive, all of that should augur well, and the currency would be interesting to monitor in the session today as well. It's been yo-yoing between sub 72 to above 72. Let's wait and watch what happens, or below 72. Let's wait and watch what it happens.
Yeah, just like the equity markets. 25 seconds left to go. Keep an eye out on SBI, keep an eye out on Bharti Airtel. These are the stocks to watch out for in the morning. Keep an eye out on some of the real estate counters as well, and how this announcement by SBI affects some of the other real estate players too. Aside from that, IT will be in focus. Remember, today is a day where you've got to see all the high beta stocks doing well. So don't know whether the defensive play will take a back seat. So watch out for Infosys. Results come out on Friday, so that's another monitorable. Nifty 50. 150 points at pre-open. That's doing well and just getting stronger. Sensex is also up 1%, 400 points higher, but we stick to individual stocks and then come back to the index once it's settled a bit more. Coming to the big gainers on the index, individual stocks, you still have losers today, but I'll talk about them in a bit. Metal stocks are going to be in focus. JSW Steel for one is up in the session. Oil marketing companies, so BPCL 3.5% higher, Z's up 2.8%. Bajaj FinServ is showing you an unnatural 9% pop. You've got IndusInd Bank 2.8% higher, SBI is up, Reliance Industries is up 2%, Maruti Suzuki is up 2.5%, L&T 13.18%, Yes Bank, Hindalco, Tata Steel, Titan, everything's up and about. I think 4 stocks that I can see which are in the red. One is HCL Tech, 580, Bharti Infratel, which is down 1%, Wipro, and NTPC. So, and TCS2 is absolutely flat. So again, IT, not a really active pocket this morning because you've got all of the beta that's kicking in. 71.44, so this is a really big pop for the currency too. Strength coming back into the rupee, 71.43. That's almost a 0.4% gain this morning.
Yeah, well, a sharp gain. Let's wait and watch if that lasts. 2 or 3 names that I want to highlight, oil marketing companies, and while BPCL remains the top draw in focus today, watch out for the likes of HPCL and IOC2. Those two should be interesting ones to monitor. BPCL likely to start off well. Let's wait and watch. But HP and IOC2 could be in focus, so that is one. SAIL and JSPL are the other 2 names that you should monitor in the session today. Could be some pretty interesting moves on those. Suntech Realty is the 3rd one. But we'll revisit all of these rates. I'm just laying this out for the benefit of our viewers as to the stocks that you should be monitoring. And last but not the least, I would watch out for NMDC that had corrected quite strongly yesterday. Let's see if there is more pullbacks there. For now, actually, yes, back from the lows of yesterday. Let's wait and watch what happens. We'll revisit these rates in a bit. We'll revisit the bond yields too in a moment from now. Get in Nikki Mirchandani, who's Johnson right now with the brokerage calls of the day on the recent mining amendments. Well, I spoke about some of these stocks and they're reacting duly. Nikki, what have brokerages mentioned?
Yeah, sure. Before that, I'm just going to read into two developments which have taken place. One is where there was a statutory transfer of forest as well as environment clearance to the winning bidder. For the extension was for 2 years. And second development which took place was the removal of the end usage of coal for the upcoming auction. What brokerages make out of this, Jeffrey says that proposed mining law amendment 2 will allow a smoother transition of iron ore, and this would in turn limit the iron ore supply disruption due to upcoming merchant mining leases, which are set to expire on March 31st, 2020. This is incrementally positive for JSW Steel, which again is securing iron ore right now from other mines and is expected to participate in this auction, and is negative for iron ore miners like NMDC, for instance, which corrected as much as 8% in intraday trade yesterday. On coal, they say that removal of end-use restriction for coal block set the stage for commercial block option. And also they go on to say that commercial mining is right now a threat for CIL, that's Coal India, but believe that the concerns at this point of time are overdone. They do not see any fundamental impact coming in on the sector for at least a span of 3 to 5 years. What Citi says is the expiry of mining leases may not be disruptive for iron ore supply in supply in FY21. They expect the potential losses to be offset by various methods like alternative production sources, inventory rundown, and lower exports for that matter. In base case scenario, they expect even limited disruption coming in FY21 and 22, but they'd like to revisit the scenario once the auction process is done through. At this point of time, they say that they like to revisit on account of two parameters, because an aggressive bidding in the upcoming auction could be a winner curse out there because of the unviability of the production of coal. And also at this point of time, they say the captive producers are in better position as compared to the merchant miners, given that they can hoard mines and limit supply in the merchant market.
Okay, Nikki, thanks very much for that. So watch out for all of those names. Abhijit, Phatak, anything in the metals and mining space that you track and you like right now to go long on?
Yeah, in fact, metal stocks have been buzzing for quite a while, and I'm bullish on them even for the near term. And Jindal, Tata Steel, SAIL, all of them, I'm expecting at least 5 to 10% rise maybe in the next month or so. So any dip in them is a buy.
Okay, any dip in them is a buy, according to Abhijit Phatak. Not necessarily go out and buy them right now. By the way, just want to mark the bond yields as well, as they would have opened up. Just want to see what levels have the yields open at, about 6.52. So no big changes there. But yeah, do keep an eye out for these as well. The other one that you have to monitor in trade are some of these chemical names, and especially Aarti Industries. The last few days it's been on a bit of a roll. Let's just wait and watch what happens today. 882 and counting, starting off slightly flattish, but let's see how the rest of the day shapes up. And Eicher Motors, which has lost out for 7 straight days, and could there be more downsides in the session today? That's the other one that you've got to keep in mind. Would you buy into this fall into Eicher Motors, Sameet, Chavan? The stock has corrected quite a bit.
Yes, certainly. In fact, if you see in the month of September, October, the stock had a stellar move from the lower levels of 16,000 towards 22,500, 23,000. And now it has retraced that particular move. Now, if you see, the stock is now approaching its 200-day moving average, which plays around 19,500, so which is 300-400 points from current level. So in case of the stock declining toward that important mark, we would be buyer around those levels, around 19,500, 19,200, and keeping a positional target below 19,000. And again, we would expect the stock reclaiming 21,000, 21,500 quite soon.
Okay, so maybe some bit of reclaiming of the losses that we've seen in Eicher Motors. Really interesting. We just did a piece this morning. They've been on Bajaj Auto and Hero MotoCorp too. While those two may have been steady, and Hero MotoCorp maybe at levels from where it's typically bounced back on the valuation front. Eicher, the fall has been pretty steep the last few days.
Yep, and the other one also from the four-wheeler space. Let's, M&M for one. Comparatively, we've seen the stock favorable on the valuation side. 530 on the stock. Its previous multi-year hurdle has been about 550. It's not yet rescaled that. It's still under some cloud. What's the take on some of these names, Siddhartha, and M&M for that matter, Eicher Motors, the others, Maruti as well, which is holding pretty strong above 7,000?
Yeah, Devina, so if you look at the entire auto space, there have been some pockets of green shoots, at least recovery in the monthly volumes that we have seen. It's purely a mixed bag if you look at the two-wheelers or the four-wheelers in the monthly volume data that have come so far, where there was some growth that was seen in the festive season, but now that had tapered off. Going forward, there is a big change, that is the transition from BS4 to BS6, and that is where we believe a lot of companies would emerge as the winners from that transition. We believe that CVs is something that could continue to remain under pressure given the high cost of transition and the lower economic growth, which could keep the demand suppressed for some more time. Passenger vehicles is something that we believe is best suited to transition from the BS4 to BS6. In that space, we believe Maruti, again, given its different price points as well as the distribution and sales network, would be better prepared for the transition. The transition would also help Maruti to pass on the price hikes along with the other price rises that they would want to take, and that should lead to some improvement in margins. Valuations are closer to our expected levels, but we believe that the stock could continue to do well going into 2020. In the two-wheeler space, again, these things are looking a little mixed. We believe, again, in that space, Eicher is best suited with the transition given its focus on the premium segment and the niche presence in the two-wheeler space compared to a Bajaj and Hero, who are present mostly in the commuter segment where the price hikes are a bit difficult to pass on. So we believe Eicher is, along with the products, is also taking a lot of other efforts. For example, getting into the distribution and the RE studios that they are getting into. They are also looking at some of the trimmer models, so basically price laddering that they are doing to get the same model at various price points, which should fill the offering pack. So we believe Eicher is an opportunity in the current market from a long-term investment perspective. The valuations as well as the growth should improve going forward for Eicher in the two-wheeler space.
All right, Siddhartha, stay on with us. We're just minutes away from market openings. We'll tell you all that you need to know to stay ahead in trade today. State Bank of India launches a new offering in the real estate financing space. The product also offers a guarantee to home buyers in case of a stuck project.
Bharti Airtel launches a QIP to raise 14,400 crore rupees at a floor price of 435 rupees per share. National
Company Law Tribunal has warned the Committee of Creditors of Jet Airways of contempt proceedings if funds to the resolution professional are not released by January 20th.
The case related to Kotak Mahindra Bank on meeting promoter shareholding norms will be heard in the Bombay High Court today.
And lastly, key brokerage calls. UBS has downgraded Motherson Sumi to neutral, but raised its target price to 155 from 140, saying that the recent rally factors in all positives.
That'll be an interesting day today. It's probably a day of watching the court. Then markets are predictable. We'll have two hearings, RBI versus Kotak Mahindra Bank, and I think the Supreme Court is likely to hear an appeal by the Tata Group seeking to quash the NCLT order. And Supreme Court will also begin hearing the appeals filed by the telecom companies today against the AGR penalty, which is due. So 2 or 3 things to need to monitor. Okay, Siddhartha, Khemka, very quickly before we thank you, the top call as discussed in the morning meeting today.
So today morning we discussed the financials sector and their outlook for 2020, where we are expecting that the mixed or the divergence performance in the financials could continue. Given the slower economic growth, the credit growth might remain subdued for some more time. However, we believe that from here on the earnings growth could pick up for some of the large corporate banks, and that should drive the valuation re-rating, given that the bulk of the provisioning and the asset quality is now behind. And from here on, we believe that with a gain in market share and focus on some of the high growth segments, companies like Icici and SBI in the larger corporate space are our preferred picks for 2020.
All right, we'll leave it at that, Siddhartha. Thanks much for taking the time out and joining us and giving us that perspective. Just a few levels that one needs to monitor because it's expiry day today. Abhijit, Phatak, we spoke about the Nifty back, but at about 8:45. The way it has started off, what are the levels that you envisage for the expiry day today?
In Bank Nifty?
In the Nifty or the Bank Nifty?
Yeah, in Bank Nifty, if 31,900 it's going to be a major resistance. If that is crossed, it might even cross 32,100. And in Nifty, as I said, if 12,180 is crossed on the futures, I wouldn't be surprised if expiry is about 12,200.
Okay, and Sameet, Chavan, what about the oil pack, BP, HP, IOC? What are the levels that you envisage? Very quickly, any one of them, not necessarily all the three.
See, BPCL is the one stock that has corrected sharply. So 480 was the previous breakdown point. So 480 is the level to watch out for. If it manages to reclaim, then we could see higher levels in BPCL.
All right, the other one is obviously Reliance Industries. That is up 1.7% at the end of pre-open, 1538 and going strong. Sameet, a quick call on Reliance Industries before we take the top calls for the day.
Yes, in fact, there's a resistance around 1534, and if it manages to stay beyond that particular level, say about 1540, then we would see this stock heading toward 1560, 1565.
Okay, let's get in some top trading ideas then. Abhijit, Phatak, what's going to be your top call for the day?
As I said, Tata Motors and Balrampur. So Tata Motors, both buys, of course, and stop loss 180 and target 190, 195. Balrampur also target 190, 195, and eventually above 200 in the coming weeks.
All right, Sameet, what about you?
See, I'll go with Ipca. A lot of stocks from the broader markets are doing well, and we expect mid-cap pharma to do well. So Ipca would be my top bet for a target of 1265, stop around 1158.
Okay, Jaman, stay on. Just taking quick opening thoughts from you, but quickly get in a quick 30-second view from Nirav Sheth. He's head of institutional equities at SBI Cap Securities. Joins us on the show. Nirav, good morning. Thanks so much for joining in. In a nutshell, we are just 40 seconds away from market open. More bullish, near-term and medium-term both?
Bullish. Near term, medium term, long term.
and you would reckon the pre-budget rally is well and truly in place?
I don't think I'm too obsessed in terms of what's going to happen in the budget. Outside that, I think you are in for a cyclical recovery. Budget will set the pace of expectation in terms of the pace of the recovery. But let's see. We'll take it as it goes.
All right, so we'll come back and talk in detail with you, Nirav. I want to pick your brains on what is it that you like and where does one stay a bit more cautious. But I guess there's just about 22 seconds left to go. Market pre-open suggesting a 1% pop. We've closed with gains of about 127 at pre-open.
Yeah, Devina, it promises to be a good start. Let's see if we build on from there. 12,153 is what the pre-open rates, as Devina suggested, are suggesting already. Let's see if we actually perk up more during the course of the day today. But here's how we are starting off on this expiry day. About 1% higher, 118 points for the Nifty 50, about 1%. The Sensex about 1%, 400 odd points, strong start. And the Bank Nifty, as it is wont, would underperform or outperform at the start. 1.4%, 450 points up for the Bank Nifty. It's a really good start for the Indian markets today. Not unexpected, but a good start nevertheless. The mid cap and the small cap indices should come up on your screen, and then very quickly we'll go to the heat map to see what stocks are moving. Small caps too starting off well. Mind you, it could be a day of outperformance for the mid caps and the small caps as we shut shop during the close of day. But here's how the markets are. Well, TCS is the lone stock in the red. That tells you something about the breadth of the market. I'm guessing the broader market breadth too is very positive. What is doing well? Bharti Infra and BPCL, the top two draws, doing very well for themselves. BPCL, I can understand. Bharti Infra, a bit of a rebound. The Airtel QIP also playing its part in all of these telco stocks. Z Entertainment, 2.5%. JSW Steel, watch out for the steel stocks. So I'll watch out for JSW Steel, watch out for Tata Steel, SAIL at the broader end of the spectrum. All of those in focus. There is some strength in Bajaj Finance and ICICI Bank from the financial space as well, up about 1%, 1.5%. IndusInd Bank amongst the top banking gainers, up about 2.5%. Z Entertainment is up about 2.5% too. Well, I get tired talking about stocks. Essentially, everything in the green, 2.5% is the kind of gains that we have for the best performing stock, which is JSW Steel, and that shouldn't surprise anybody. Now up 3% and counting. Well, actually, just those couple of pockets, the usual suspects that I want to mark before I hand it over to Devina for what's happening across the spectrum. One, the oil-related names, and two, the metal names. So, well, relief for the refiners. IOC 2.5%, HPCL 4.5%, BPCL 2.5%. So all of these start off well. And then the metal names, maybe Chalk and G's performance, are all of them in the green too. Well, without exception, JSPL up about 2.5%, but SAIL 1.5%, and NMDC, on which brokerages expect some downtake or correction, also starts off well, buoyed by the market mood. Devina, strong start. What are you spotting?
Firstly, the breadth of the market is 1:10 in favor of the advances. So the breadth of the market is extremely strong at open. I'll start talking about the gainers then. First off, the stock in news, Suntec Realty, on the back of the builder finance from SBI, is up 5%, so that's doing well. A stock like Navkar Corp, a 31 rupees stock, but it's up 5%. Then you've got IDFC, which is up 4.5%. JM Financial is up 4.5%. Zealand, 4.5% higher. And then you've got the likes of a GVK Power, smaller name. JSW Steel, we spoke about that one. Icici, then you've got TV18, which is up 3%. Texmaco Rail, Strides, Marksons Pharma, Sterlite Tech is up 2.5%. IOB has moved up 2.7%. Syndicate Bank, Edelweiss, PNB, all of these names are up and active in today's session. Bank of Baroda, NBCC, RBL Bank, everything is up to 2.5%. You have a few losers, but nothing actually much to talk about. These are all your usual suspects, which are usually down, but just a handful of them, so it doesn't even warrant a mention. Nirav, we've had a volatile start to the new year, but the anticipation as we headed out of 2019 into 2020 was this is going to be a slightly different year. You'll see a pickup. It was an extremely subdued 2019, to the second half really kicked in. Sure. What are the major changes that you see or envisage in 2020 in terms of earnings? There obviously will be global triggers, our own domestic triggers as well. But what is the key theme that you're
two things. First of all, I think to try and understand what is going to change in FY20, you need to figure out what essentially held you back in FY19. I think the crux of the problem was the NBFC crisis. You cannot have 22% of the credit being squeezed in the market and you expect that the growth is going to recover. So we are seeing the effects of that, and I think we sort of passed that phase. Second thing is obviously earnings, right? So banks is roughly about 40% of the weightage, and there is a big rebound in earnings that is going to come, not only from normalization in the credit cost, also because of the fact that credit is sort of picking up from the bottom levels. So I think you got a fairly stable global macro, you got a fairly stable macro environment. I'm talking about the inflation, I'm talking about the interest rate cycle, and I'm talking about the fact that your current account deficit and stuff like that seems to be under control. The only missing piece is the pace of the recovery, right? You are at about 5% or 4.7%, whatever it is. What is the mean reversion going to be? Is it going to be 6%, or do we see trajectory going back to 7.5 or 8% over the next 18 months or something like that? That is going to determine the performance of the risk assets.
Okay, and I would want to just counter that a little bit, but just before we do that, just one final thought from Sameet Chavan, since he's still with us. Sameet, because we started off so well, just before we thank you, one key name that stands out in the first 4 minutes of the opening pop that we've had.
See, a lot of stocks are doing well. As I said, Midcap Pharma is doing well. There are some NBFCs that are doing well, but one stock that is catching my eye is Cummins India, which has been consolidating of late, and it's on the verge of a breakout now. So Cummins India from here on is likely to do well. We expect 600, 605 kind of level for this particular counter. Can be bought at current level, keeping stop loss below 564.
Okay, Sameet, thanks so much for taking the time out and being with us today. Appreciate your time. Actually, I'm rethinking. It's a pointless debate to have because we'll not know what happens. If once the budget is out, we'll actually have better figures and there might be a more informed discussion. Let's assume that your optimism is right and we can't time the pace of the recovery.
Right.
Or when it will happen. But how do you then prepare for that? Do you start buying lock, stock, barrel into some of the economic sensitive spaces right now? Because some of these are already showing signs of a pullback, right? Metal names, for example, they are hiking prices even though demand visibility may not necessarily be there right now. How do you play this anticipated recovery?
So you want to take a view on the economic growth rate in your essentially just keeping at the back of the mind. That is not how we do investment in the stock markets, right? You've seen a lot many times when economy does very well and the stock market doesn't do anything, right? So it is fairly bottoms up. What you are seeing right now in metals is also part of what is happening to global takeaways. Nothing to do with the Indian demand supply situation, right? If the global metal prices are going to go up, you are going to see the counter effect even in the Indian market. So that is what is happening, and it's coming off a very low base. And the valuations are completely down the dumps as far as the metals are concerned. So you will have this kind of cyclical uptick. The point I'm trying to say is that you have to take a view on what the government is going to do. If the economy is going to go down, you expect the government to react, right? None of us expected the fact that corporate tax rate is going to come down to 20% and to 22%, and for new manufacturing companies at 15%. That's a big thing. That is almost a 13% increase in intrinsic value for the companies all over, right? Eventually that is going to kick in. and you expect some more steps to be taken, assuming that the growth doesn't pick up, right? So you have to look at the probability of what kind of actions the government is going to take, and in that context, where the stocks are trading today at this point of time. And I think that risk-return trade-off is fairly okay.
So we've talked about NBFCs, we've talked about a play on growth, which obviously could also encompass what happens to infrastructure, what happens to capital expenditure. Do you think all of that is going to propel interest coming into some of these spaces, like for stocks like L&T, for road constructors, for cement manufacturers, for metal companies, because they're all ultimately feeders to construction?
Well, I'm not very sure about the investment cycle. First of all, if you look at the usual sequencing of when the investments happen, your utilization levels have to go up. Secondly, my profits have to come. Those profits eventually are leveraged, right? So profits, you basically put horse in front of the cart.
But the corporate tax cuts which went to the bottom line, you don't think that will be utilized by the private sector to make investments at this point?
No, not till the time, till my utilization levels actually go up. See, and again, you'll have to differentiate between the type of the capex. So if you're talking about where you've got a clear deficit, which is the infrastructure capex, where the largest player is government. Yeah. Right? So they are doing their bit. But the fact of the matter is that you got fiscal pressure, then states have got their own pressure, so you're not going to get a very good delta out of that. And then look at, largely the private sector, right? There I think that is still about 18 months or maybe even 2 years before the capex picks up in a meaningful fashion, because you've still not sorted the problem that are there in real estate. That is 7% of my investments, right, as a percent of the GDP. Look at any of the companies, talk to the metal companies, right? Most of them are talking about the fact that they want to deleverage. I mean, Reliance comes and tells you that, they want to be debt-free by FY 2022, right? I don't know any promoters who says that I want to go and set up a steel plant. So you got a public sector, you got a private sector in the public space, which is behaving differently. And you got complete different things that are happening in the private equity space. So you got Ritesh Agarwal, who is borrowing $2 billion personally. And huge investments are happening in Ola, Uber, Flipkart, stuff like that. So I think that we focus too much on what is happening on the listed part, and a lot of things are happening in the new age economy, which is not a part of my listed entity. So eventually you need these companies to come and list themselves, and then you know how the capex cycle is going to pick up. I don't think that anyone is really excited about setting up a steel plant right now. It takes 10 years. Right, and you got a huge problem in terms of getting clearances and stuff like that.
But they are also getting it inorganically. So I mean, just buying it to the NCLT is one option.
But right? That I think that is investment that's already been done, right? So you're just changing. It's not going to add to my GDP. That's the point I'm trying to make.
The other thing would be, would the consumption engine start to spur a little bit more? Do you see that much more fire coming in from consumption?
So I'm far more bullish in terms of what happens to the consumption recovery, simply because of the fact that you had these problems with the credit, and then you had problems around sector-specific issues like BS4 to BS6 transition, inventory rundown, price increases, stuff like that, right? So we are passing through those stuff, and which will probably get sorted out in the next 3 months or something like that. So yes, consumption will pick up. I just saw Titan's numbers held up pretty well, what they've been talking about. People are slightly worried in terms of the asset growth, disbursement growth at Bajaj Finance. 35% is still a very healthy number. Yeah. So I think consumption should be holding up fairly well. What you still need, I believe, is a far more aggressive monetary policy. You'll need a far more aggressive fiscal policy. I think we've really faltered in terms of policy responses, in terms of trying to take the economy forward. I mean, think of it. You got a WPI inflation at 0.5%, right? You tell me about one single manufacturing company which wants to raise money at 10% or 11% when my inflation is I mean, how can you live with 9%, 10% real growth rates, real rates in the system? So I think that is what is hurting us.
Yeah, even with the tax cuts, domestic companies might find it difficult, though you never know. Maybe global companies come in and set up shop at those corporate tax rate cuts, tax rates. And so how do you then try and play? And there are a lot of stocks which are in news today as well. So if you're thinking about what's the best way, okay, let's try and think about it this way. pockets which are starting to come out of hibernation. We spoke about metals as one. There are two others. One, Airtel and telecom right up there. What are your thoughts here? Can these be money generating machines over the next few years? I'm not just talking about whether Airtel can move from 450 to 600. I don't know what your view is. I'm just kind of extrapolating. Or can it be a company that could actually give you 15, 20, 25% CAGR for the next 10 years?
So I'm far more comfortable taking a view in terms of what happens over the next 18 months, where I would believe that that could be a 20% or 25% upside in Bharti, because essentially it's a consolidation theme. And I suspect that it is just too late for Vodafone now to come back into the game, right? So it's basically out, and therefore you've got two large guys who are going to share the profits. The nature of the beast is telecom is such that you're not going to have too much of free cash flows. By the time you start making some amount of profits, you will have 5G auctions, and there'll be a huge amount of investment cycle that gets into 5G. To the best of my knowledge, I don't think that there has been a single telecom stock in the world which has given any significant returns. Right? So I would not to get too excited in terms of next 5 or 10 year perspective.
18 months.
Yeah, so it's exactly how I'll approach any commodity stock, right? I'll try and assume that can I get the cycle right, and if I play the cycle right, there is money to be made.
Would OMCs be in that same bucket too?
OMCs, yes, certainly, but I'll be far more bullish on something like BPCL if it's privatized. I think that market is underappreciating the price at which the stock will be sold at. It is not only EV to EBITDA. The fact that when you look at PSU companies, the amount of efficiencies that you can bring in, the most importantly is that your return on incremental capital, because they set up refineries at 7% IRR, 8% IRR, right? A new owner doesn't have to do all those things. And you've seen history in terms of how, Hindustan Zinc has been taken at some particular level and what sort of productive improvements came, right? So I wouldn't be surprised if the stock is bid at 60, 70, 80% premium to where it is trading right now.
So for these PSU companies, while obviously from our end, the government is pretty open to get in foreign investors as well, but is the demand equal from the other end to come and invest into Indian assets?
Well, I would.
Just as an example, when the entire talk before the actual approval came in for Shipping Corporation of India, we spoke, to the ex-management, and he was like, there doesn't seem to be a right fit for anybody globally, except maybe one or two players who'd be interested in picking up stake in a shipping.
Absolutely right. So I'm thinking you look at the quality of the asset, right? Yeah. So with the Shimi company, I don't think there'll be too much of interest, right? But if you're talking about a market, so BPCL does a 20% ROE right now, despite all the legacies of working in a PSU environment, right? And it is almost some sort of an oligopoly industry, in a sense that you don't have too many new players, and they've got advantages of having the right kind of stations in the right kind of places and stuff like that. So I'll be very, very surprised if you're not able to extract value in something like this. If it comes to something like an Air India, again, you have to look at, it's a difficult industry, not easy to make really money out of that, and therefore you cannot have the same level of conviction in terms of trying to put a value on that stock. But for something like this, I'll be very, very surprised.
Okay, Nirav, we'll leave it at that. Thanks so much for taking the time out and being with us, and wish you a great 2020.
You too. Thank you. It was a pleasure being here.
Yeah, it's a pleasure having you.
Thank you.
Well, the markets are doing well, Devina.
Well, they are holding tight, about 132 points gain coming in on Nifty 50. That's 12,156. Coming up next, residential housing will remain Godrej Properties' mainstay. The conversation with Pirojsha Godrej, where he lays out the developer's strategy in the long term.